CECP's research, I also want to mention this is a great preview to the Giving in Numbers report, which will be coming out in early fall, and so we're excited to share our first look at the findings. We're also pleased to tell you that we've just released a new report called Business at its Best, Driving Sustainable Value Creation. And so if you have not had a chance to download this report from our website, I encourage you to do so. It is fresh off the press. It is resulting from a collaboration between CECP and Accenture, and really looks at how a company can implement sustainable value creation and really provide some practical guidance around that. It's based on CEO interviews and polling of those CEOs, as well as including several terrific case studies. So I really encourage everyone to take a look at that if they haven't already. I'm going to go back one slide and just see if we can get that poll question to work. But in the meantime, we'll kind of give you a quick sense of what we're going to talk about today. We're going to go through some of the findings we've seen. Oh, the poll is up. So if you could just chime in and let us know if you are representing a company, if you are working at a nonprofit, if you are part of a we'll see if it comes back on the screen. I apologize for the technical difficulty here. Well, I think we got...
I apologize. I closed it on accident, so we were only able to get a few responses for that one.
Okay, great. Well, we'll go right ahead and try and proceed through the slides and get right into the agenda. So today we're going to talk about several things. We're going to look at corporate financial performance in 2010. We're going to look at the trends in corporate giving and really look at how this impacted companies on a company level. We'll look at the changes overall. We'll look at the reasons for increased and decreased giving. And then we're going to conclude with some additional findings from 2010. I'll give you some previews of the information to come in Giving in Numbers. We'll look at giving by program area and international giving, employee volunteerism, matching gifts, and really go through some of those topics in more detail. So I hope this will be helpful for everyone on the line. To start, I would like to just mention that we've had a record number of participants this year in the survey. This year we had 184 companies participate, which is terrific. It totaled $15.5 billion in cash and product giving. So as you can see, we've got quite a repository to build on. This includes 63 of the Fortune 100, which is a tremendous representation from that group as well, just to give you a sense of the size and the scale of the company participating. In terms of some of the terminology we're going to talk about today, I'll reference just a few things and hope the slides catch up to me. When we talk about total giving for CECP, just to give everyone that background, total giving for a company in our survey includes direct cash, foundation cash, and non-cash. The direct cash is your corporate giving from headquarters or regional offices. Foundation cash is your corporate foundation giving, and non-cash is the product or pro bono service assessed at fair market value. We also, when we talk about year-over-year trends, we're going to look at match set data, which means that when we look at a year-over-year finding, we're going to be looking at the same set of companies for each of those years. So you'll see us reference that a lot in the data. The other pieces we'll talk about are some of the calculations we'll use, whether that's a median or an aggregate, and we'll get into those as we look at the findings. We're just going to pause for a second to wait for the slides to come up, and I'll let Megan kind of let me know when she's ready.
Thanks, Allison. We're almost up. Okay, so Allison, if you want to let me know to move the slide forward, I'll follow you with your presentation.
Yeah, okay, great. Well, there's a lot of animation on the slide, so I'll just have you kind of keep pushing it forward as we go. So if you'll move forward 2 slides, that would be great. When we look at a 4-year match set, this is the set of companies that have participated in the survey from 2007 through 2010. Just to let you all know, we have a great group. So we have 110 companies that we can use to look at 4-year trends. And as you can see, almost half of them are Fortune 100 companies. And if you could go forward. When we look at corporate financial performance in 2010, this is where we'll start our story. What we see here is that in 2010, corporate profits rose. And each year, giving officers in our survey let us know that corporate financial performance does have an impact in many cases on their corporate giving budgets in some respects. And so we wanted to take a look at how those data points have changed in 2010 and how stakeholders are viewing this information and how this might pertain to the corporate giving levels and amounts. So as we get started, we're going to begin with a poll question, if you'll move forward to the next slide. And we're going to ask the audience if you could chime in and let us know whether you think the economy has fully recovered, is making progress but is not there yet, or is heading for a double dip.
Okay, so we're collecting answers, and I will close the poll shortly. Allison, the answers should be up on the screen.
Okay, great. So we're seeing that 60% of the audience feels that the economy is making progress but is not there yet, with almost 40% saying we're heading for a double dip. Well, let me show you what we saw in the findings for 2010, just to give you a sense of where companies were this past year. So when we look at a couple of different data points, here we're looking at some data from the Bureau of Economic Analysis. And here what we're seeing is that corporate profits declined at the end of 2008 into the beginning of 2009. But what you're seeing across the screen here is that the corporate profits have risen in 2010. And as you can see by the line drawn across this graph, they've actually risen above pre-downturn levels. So this is something to continue to watch. If you go to the next slide, when we look at the CECP sample, what we see here is that, in fact, 70% of companies reported increased profit by the end of 2010, with only 30% reporting decreased profit. So we are seeing a bit of a recovery in terms of the profit levels from 2009 to 2010. Certainly there was a lot of fluctuation in the years prior, so it is something that we realize, is coming back from a bit of a lower level. If you go to the next slide, what we like to show at CECP is a distribution. We like to show that basically when we look at this, we're looking at the percentage of companies that are changing their levels in profit by certain amounts. And what you're seeing here is that, in fact, 69% are reporting increased profit from 2009 to 2010. But the interesting part here is almost 50% of those companies are reporting increases greater than 10%. So we really are seeing a change from 2009 to 2010 in comparison to where those companies were the year before. Now, I will mention in some of these distributions, you're going to see this flat category. This is something we brought into the chart just 2 years ago to basically show a little bit of a negligible change, somewhere between -2 to 2% range. So just to let you know what that is. If you'll go to the next slide, one of the other data points that we've looked at this year is the level of cash reserves that companies have. Now, this is data from the Federal Reserve, and what we see is that companies have far exceeded the levels of cash reserves that they held even from 2007. So again, these are just some examples of what we're seeing in corporate financial performance for 2010, and on the other side of that, what many stakeholders are seeing. If you can go to the next slide, what I wanted to show here is a little bit of the data from employment. Now, certainly in the past few weeks, we've all heard, I would use the word gloomy, report coming in terms of the unemployment figures remaining very high at 9.2%. What we saw in the workforce changes within our CECP sample, and again, in the red, you're looking at the changes from 2009 to 2010. What you're seeing here is that it does seem to remain fairly slow. You're seeing the changes between -10 to 10%. So we are seeing some increased hiring from some of these companies, but again, it is not dramatic in the sense of how that's changed from year to year. if you'll go to the next slide, we'll just kind of conclude this section with a couple of key points. I mean, certainly what we're seeing in the sample is that U.S. corporate profits are continuing to grow. 70% of companies are reporting increased profit, the majority of these by 10% or more. And again, for companies and for other stakeholders on the line, there is a question here of how this is perceived and kind of how this ties into the corporate giving story, which is what we'll get into next. So if you would just go to the next slide, we're going to ask the audience to chime in and give us their thoughts on whether they think most companies increased or decreased giving from 2009 to 2010. So do you think that most companies increased giving? Do you think that most companies decreased giving? Or do you think that most companies stayed flat?
Alison, we'll wait a few more seconds and then we'll share the results.
Okay, great. So we're seeing that more than half of the audience thinks that most companies stayed flat from 2009 to 2010, with 24% saying increased and 23% saying decreased. Well, I'm going to hold you in suspense no longer. We're going to go right to the findings. What we saw in the CECP sample for total giving is that we saw this increase. A majority of companies reported higher giving in 2010 than they did in 2009. And in fact, 53% of companies are giving more than they did before the economic downturn in 2007. So let's get into some of those findings. And I'll just pause for 1 second and see if we can switch controls here. Hang on 1 second.
Alison, go ahead and try to move the slides and see if we switched it to you.
Yep, it's not going forward, so we'll just keep it with you. Great. So if you'll just kind of keep proceeding through this slide until everything loads, we have a bunch of animation on here, so if you can just do a couple more clicks, that would be great. And we'll keep it there for a second. Now, when we look at the question of whether total giving has increased in a particular year, we look at several things. We look first at whether more companies increased or decreased their total giving from 2009 to 2010. What we saw was that 65% of companies increased their total giving. Now, with that comes the caveat, how did those contribution levels compare to pre-downturn levels? Let's look beyond 2009. We know that was a tough year. So let's go a little further back, and that's what we're going to look at in the data. In terms of the second question, we also look at whether the median total giving has changed from one year to the next. Now, the median is the middle number in a sorted set and is indicative of the typical company's giving. It's a good indicator of where the middle of our set lies. What we saw was that it stayed fairly flat, rising only 1% over 2009. With this question, we want to know which industries were driving some of these changes, what types of giving specifically supported these increases. And the third question is we can certainly look at whether the aggregate total giving, the straight sum of total giving in the set, has increased or decreased. Now, what we see here is that aggregate total giving within this matched set of companies participating in our survey rose by almost 18% above 2009 levels. So with this, of course, we want to see what industries were driving this. We know that healthcare dominates aggregate total giving in our sample. If we remove that industry, what happens? So that's what we're going to look at. I hope I'm holding you all in suspense. So we'll go to the next slide. Now, when we look at the percentage of companies, this is a great way to look at year over year how many companies are increasing or decreasing giving. From 2007 to 2008, we see 54% of companies increased giving. From 2008 to 2009, only 40% of companies increased giving. And then from 2009 to 2010, we see 65% of companies increased giving. Now, if we go to the next slide, CECP, as you've heard me say now a few times, prefers to look at this by a distribution to see really what magnitude changes are we seeing. Now here, from 2009 to 2010, which are your cardinal bars there on the screen, what we see is we do see 59% of companies increasing giving, but if you see in that shaded box, 40% are increasing giving by 10% or more. Now, you can really see the difference here in terms of what happened from 2008 to 2009, and then from 2009 to 2010. The year before, we were seeing a sizable number of companies reduce giving by 10% or more. We are now seeing a little bit of the opposite of that from 2009 to 2010. If we go to the next slide, I think it's really important to put this in context. Looking just from 2009 to 2010 doesn't tell the full story. So we went back a few years. In fact, we went back to 2007 before the economic downturn really set in for most companies. What we did is we compared a company's total giving in 2007 to their total giving in 2010. And what we found was that 53% of companies gave more in 2010 than they did in 2007. Not only that, but what you're seeing on this chart represents the kind of extreme directions in which companies have changed their giving. 25% of companies are giving 25% or more than they did before the economic downturn, took hold. On the other side of that chart, what you're seeing is 21% of companies have reduced giving by 25% or more, showing you some real differences in how companies have responded to the economic uncertainty and how that has impacted their corporate contributions. Let's talk a little more specifically about what we're seeing. When we look at median total giving, and again, this is your change in the kind of typical company's giving. What we see is, again, from 2009 to 2010, it is remaining fairly flat. When we look by industry, we're seeing some increases from 2007 to 2010 in the healthcare industry, in the IT industry, in the industrial industry. Again, notwithstanding some bumps in the road there, but again, those are some industries we're seeing that increase. When we look at aggregate total giving, if we go to the next slide, what we're looking at here is the straight sum of giving in our set year over year. And again, as I mentioned, we saw this very large jump from 2009 to 2010 with almost an 18% increase. When we look at the industries driving that, certainly the healthcare industry contributed to that. And in fact, the increase was supported by gains from all industries, with the exception of the consumer discretionary and the utility industry. So again, some industry differences that we're seeing when we look at those two metrics. If we go to the next slide, now certainly we couldn't let an 18% increase go by without investigating that a bit more. And certainly when we look at an aggregate, we're looking at changes at the extremes. So we know that some changes from a few companies can really drive how this figure changes. When we looked more closely at the data, we found that actually 10 companies combined to give more than $2 billion more than they did in 2009. There were some very significant reasons for this. Within this group, we saw several pharmas. In fact, 4 of the 10 were pharmaceutical companies, which combined to give more than half of this increase. Now, reasons for this on their end included not only increased donations to their patient assistance programs, which provide medicine to those in need, but also some very substantial funding increases for signature programs that the company has had in effect or is rolling out. Now, a couple of other reasons within this group. Certainly, if you'll go back one second, Megan, a couple other reasons. One thing we see is the above-budget disaster funding for some of the events that took place in 2010, which we'll talk about more, but also some of the residual impact of mergers and acquisitions, which really have caused contributions to far exceed some historical levels. Now, you might be saying, if we go to the next slide, Alison, you've told us that healthcare dominates our aggregate total giving, and yes, in fact, it does. It contributes and accounts for about 46 to 53% of our aggregate total giving in a particular year. So if we go to the next slide, what I wanted to show you is we did look at this without healthcare to see if the trends in fact changed. And what we see is that on the aggregate side, we see this still rising, and we see median giving still remaining fairly flat. So again, the directional changes, directional findings are staying the same even without the healthcare industry. Now, if we go to the next slide, one of the things CECP looks at when we look at these changes in giving is what type of giving is driving these increases or decreases. Now, this may look like a bit of a daunting chart, but just to give you a sense of the dimension here, the top half of the graph where it says increased giving, we're looking at companies that increased their total giving, and we're looking at how they've changed their direct cash, their foundation cash, or their non-cash. On the bottom half of the graph, we're looking at companies that decreased giving. I'll give you the key takeaways here. From 2009 to 2010, you can see in the direct cash box, those companies that increased giving increased direct cash by a median of 22%, which means that corporate cash really was a driver of these increases from 2009 to 2010. Foundation cash remained fairly stable, and non-cash changed considerably for those that were decreasing giving, but a little bit less so for those that were increasing giving. Again, important to look at this impact of cash contributions in 2010. If we go to the next slide, one of the things I was very interested to find out is what the primary reason was for those cash contribution increases. And so we asked this at our recent Corporate Philanthropy Summit, which took place at the beginning of June. We asked our audience what was the primary reason for increased cash contributions. And setting aside those respondents that did not increase cash contributions at their company, what we saw in terms of some of the reasons were considerable funding and to disaster relief and recovery efforts as a key reason, followed by increased funding to either a new initiative or an existing initiative. We also saw some better reporting from business units, which can also result in an increase. So again, a couple of changes here. If we go to the next slide, I think one of the really valuable parts of CECP's annual survey is that we not only collect quantitative data, but we collect qualitative data about why these changes were happening. And that's further informed by CECP's very strong relationship with corporate giving officers. So some of the reasons to I guess, continue to highlight what we're seeing in the trends, on the increased side, certainly we saw pharmaceutical companies increase medicine to those in need. We saw increased giving to disaster relief for 2010, whether that was to Haiti or the floods in Pakistan, and we also saw the impact of the mergers and acquisitions again in 2010. We saw that in 2009 as well. Some other annual reasons that we hear, whether it's a new signature program that's being launched, an improved administration of the grant program, or increased giving to strategic focus areas, again, all reasons for increased giving. On the second half of this slide, what you're looking at are some reasons we heard in 2010 and ones we hear more on a regular basis for increased or decreased giving. Certainly the economy was cited frequently by companies, and we'll talk a little bit about that in just a second. We'll also look at the fact that for some companies, one-time donations of land or property result in an increase or a decrease in a particular year, and as well, to that, matching gift contribution fluctuations happen, whether that's due to employee participation, program policy changes, and employee eligibility. So again, some changes that could happen in either direction for a company, as well as the beginning or the conclusion of a multi-year grant. So again, some reasons we're seeing for why these changes happen. If we go to the next slide, one of the things that we asked at our Corporate Philanthropy Summit is I posed to the audience the following question. I asked, how does your company determine the annual corporate giving budget? And as you can see from the answers, 46% of the audience said that the company takes an array of issues into account when setting their budget for the coming year. And as you can see from the answers above, it is not strictly a multi-year average of profit levels. It wasn't strictly a forecast for upcoming year profits, et cetera. It really was a little bit more of this array of issues that were coming into play. If we look at the next slide, the reason we asked this question and what we're seeing in the data is, in fact, the result that increased or decreased profit does not always result in increased or decreased giving. So as you can see in the circled pieces here of these charts, for companies that actually decreased profit from 2008 to 2009, if we're looking at something like a one-year lag where we assume that perhaps previous year financial performance has impacted the corporate giving budget, here we're seeing for companies that actually reported decreased profit the year before, 60% of them increased giving. When we look at the kind of effect of a same year corporate financial performance to same year giving budget, what we see is, in fact, 68% of companies that reported decreased profit increased giving. So we're not always seeing that one-to-one relationship between corporate financial performance and corporate giving budgets, and I think that really does speak to the unique ways in which these are set. If we go to the next slide, one of the metrics that we do look at, and again, CECP does not advocate for any one metric to define appropriate giving levels. However, these are two metrics that are frequently looked at in terms of benchmarking, so I'll share kind of the year-over-year story with you. When we look at total giving as a percentage of pre-tax profit on the left, in the purple or blue, depending on your screen, we see the increase in 2008 largely due to decreased profit, and then a little bit of a reduction as we come back into 2010. Now, on the other side of the screen, what you're seeing is that giving as a percentage of revenue has remained fairly constant at about 0.13% for the past few years. Now, I'm going to conclude this section on the next slide just with a few key takeaways. Again, when we look at the question of whether giving has increased or decreased, what we saw was 65% of companies giving more in 2010 than they did the year before. Aggregate giving was rising. Median remained largely unchanged. What we're seeing when we look a few years back is, in fact, 53% of companies are giving more in 2010 than they did before the downturn. And again, if you recall that graph, we really were seeing some real differences in how companies have been able to respond since then. Certainly, cash was a key driver for the companies that were increasing giving in 2010, and we've talked a lot about some of the reasons specific to 2010 for why we saw some of these changes. I'm going to pause there and see if there are any questions that came up in this section, and otherwise we'll keep going through some of the findings.
Hi, Alison, it's Casey, and we do actually have a question going back to one of the first couple of slides, where we learned that companies continue to build their cash reserves, but that hiring remained slow. And the question was, does the increase in cash have any kind of direct relation, or did you find that it has any direct relation to the layoffs that were made during the downturn?
It's a good question, and I haven't looked in the data to make those specific connections. But certainly one of the things we also looked at is we did look at some changes in revenue by company level to kind of get a sense of how revenue has changed as well in terms of looking at that very question, but did not go much further in that data yet to draw that connection.
Great, thank you. And I just want to remind everybody, as we're going through the rest of the presentation, if you have any questions, to submit them through the question box on your screen.
Great. Well, we'll get into some of the findings, and again, feel free to ask questions as we go along, and we've saved plenty of time at the end to get through those. Now, we're going to here in this section look at some 2010 findings on some of the topic areas of great interest, I think, to both a nonprofit community as well as the corporate community. So we'll go to the first slide in this section, and one of the things we look at each year is the allocation of giving type by industry. So here what we're looking at is, what does total giving look like for all companies, and what does it look like by industry? And this is really breaking down how much of the contribution is coming from the corporate headquarters or regional offices, that's the direct cash, how much is coming from the foundation cash, and how much is coming from non-cash, which is your product or pro bono service. So again, what you're seeing here is for all companies, non-cash on average is about 19%. But as we scroll down, what you see is there's some real differences by industry here. Certainly the healthcare industry providing about 46% of total giving on average through non-cash. Other industries like the utility industry and the service industry, non-cash contributions are a bit more minimal. And for these companies, this could include pro bono service, or it could include one-time donations of land or intellectual property or office equipment, etc. So again, some interesting differences here, and I think it's also useful to point out in terms of the split between the cash giving from the corporate headquarters and also how much is coming from the foundation. So again, some differences to watch. Yep, when we look at the next slide, one of the things I wanted to share with you is, since we're talking about foundation cash and how much is actually coming from the foundation out of these total giving budgets, we did look in our sample, and 81% of the companies in our sample reported having a corporate foundation. I also wanted to share with you the structures in terms of kind of the average corporate foundation structure. 40% falling into the predominantly pass-through structure in terms of how the corporate foundation is set forward. Also 23% then falling into the predominantly endowed. Now certainly, as we've seen over the past 2 years, and we looked a little more extensively at this in Giving in Numbers last year, and may do so in this report coming out as well, is the impact that the economy has had on corporate foundations, whether it's on their endowment or on the amount that the company is transferring to the foundation. So in the past, while endowed foundations were typically seen as a vehicle to kind of weather a lot of storms, I think that certainly we've seen all types of foundations being affected by what we're seeing in the economy. So again, more to come on that in Giving in Numbers. When we go to the next slide, one of the other features that we look at in terms of a corporate giving portfolio is we look at the motivations for the grant. Now, I should pause here and say there is no right motivation for the grant. Companies use this categorization to be able to say whether a specific grant was charitable, which is really where the company is expecting little or no business benefit. This could include your matching gifts. It's much more of a reactive type of gift, versus community investment, which we also sometimes call strategic. This is really a type of grant that's important both to the long-term success of the business and really serves and addresses a critical community need. Typically a multi-year grant could be strategic in nature. And then we also have commercially motivated grants where the benefit to the corporation is the primary motivation. Here we're seeing things like cause marketing or sponsorship of charity events. So for each of a company's grants, they are able to categorize what the motivation is for it. Now, if we look at the next slide, one of the things that we watch year over year are the changes in terms of the motivation for giving. And we're looking at this on the left for manufacturing companies and on the right for service companies. And what you see is that while service companies designated twice as many grants to commercially motivated initiatives in 2007, just about twice as much, the disparities really kind of diminished, with both companies allocating about 4% to commercially motivated initiatives. The other difference that you're seeing here is that manufacturing companies typically give close to 1/3 of their giving on average, as we looked at, in the form of non-cash, and that can typically be categorized as community investment in terms of using those product donations in a manner that's serving a critical community need. So again, some differences that we watch in giving motivations. If we go to the next slide, again, we're looking at really an array of issues here relating to corporate giving. Certainly employee volunteerism is a big component of corporate engagement, and while we don't include employee volunteer hours in our total giving, we do look at the types of programs companies are offering. We look at the number of hours that the employees are recording. Pro bono service is the only type of employee engagement we include in our non-cash. But what you're looking at in this figure are the number of companies offering each of these programs in 2010. And what you can see is that dollars for doers, employee recognition awards, flexible scheduling for employees to volunteer at a nonprofit, as well as that paid release time, which is where the company is allowing the employee to volunteer at a nonprofit on company time, are the kind of 4 most prevalent volunteer programs on the domestic side. Most of them correspond with what's most frequently offered on the international side, but a few differences there. And what you'll see in Giving in Numbers when we come out with the report this fall is a much closer look at this. What are we seeing in trends for paid release time? How many hours are companies reporting on company time and off company time? What are the most successful volunteer programs as rated by the company? So again, some more details to come in Giving in Numbers, but just a quick preview of kind of what we're seeing for the 2010 trends in terms of the types of programs offered most frequently. If we go to the next slide, another topic we look at is matching gifts. Now here in CECP's survey, we're looking at the corporate side of the match. So what we see here is for all companies, the median is about 15% of all cash giving is allocated for matching gifts. And as matching gifts are competing for those cash resources, that's why we look at this out of total cash rather than out of total giving. What you're seeing here are some real industry differences in terms of the allocations of matching gifts as part of the cash budget. Certainly if you look down on your screen, what you'll see is the information technology industry actually provides about 22% as a median of their cash giving in the form of matching gifts. Again, you really have these differing perspectives on how strategic matching gifts are, either for the employees as a retention or a recruitment tool, or to the nonprofits in terms of whether that's a focused program going to one specific area or whether it's open for employees to choose. So you're seeing some real differences here by industry, which I thought was useful to point out. If we go to the next slide, one of the most interesting areas to watch, I think, each year are the changes we see in how companies are allocating that funding by program area. And I will preface this by saying these percentages change very minimally year to year. So when we see changes, we're very mindful to watch what's going on. Now, these are average percentages for each year, 2009 in the blue and 2010 in the red, to show you what we're seeing on average for a typical program area allocation. Certainly about a third going to health, followed by education if you combine the two categories, higher education and K-12, and then community and economic development receiving anywhere from kind of 14 to 15%. A couple of things to mention on this chart. Certainly from 2009 to 2010, you're seeing some increases. You're seeing some increases in disaster relief. You're seeing an increase in health and social services, as well as an increase in K-12 and a little bit of an increase in the environment. Now, a couple of things. Last year when we looked at this chart, we really saw an increased focus on basic needs, whether that was health and social services or community economic development. I think this year we're seeing the increased focus from companies on disasters from 2010, as well as that continued focus on basic needs as we continue through this uncertain economic time. So a couple of things we're looking at there. If you go to the next slide, it's certainly very interesting to break this down by industry. And Megan, if you give just 2 more clicks, I'll show you how to read this chart. That's great. Thank you. At the top of this chart, what you're looking at are each of the program areas, and on the rows of the table, you're looking at the industry. So the 2 that I've highlighted here in a light blue, or again, whatever color is coming out on your screen, if we looked for the higher education industry and went down that column, we're looking at the information technology industry as the one that's providing the highest percentage of their total giving to that specific program area. They're providing 21% on average to higher education. If you look up that column, the energy industry is providing about 20% of their funding to higher education. Now, if we look on an industry level for the IT industry, again, just as an example, they're providing 21% of their giving to higher education. They're providing 16% to K-12, 23% to health and social services. So you can really take a look at this chart from a number of different ways, whether you're a nonprofit and looking for the industry that's providing the highest percentage of their giving to your field, or a company and looking for what your peers are doing on average. A couple of things to note, certainly in Giving in Numbers coming out this fall, we'll also have who are the highest funders in terms of dollar amount to each of these industries, and that's important as well. Again, this is just the industry that's providing the highest percentage of their giving, or a percentage of their giving to a particular industry. So always important to have kind of both pieces of that to look at this question. But again, some real industry differences in terms of how companies are focusing their attention. Certainly you see the focus from IT and energy on education. You're seeing certainly the healthcare industry providing, as you can see in the yellow, 75% of their funding to health and social services. Financial industries providing about 24% of their funding to community and economic development. as well as 7% to culture and arts, as well as utilities providing it. So you're seeing the differences in how companies are focusing their attention based on their different programs and their business. Now, if we go to the next slide, what I wanted to share with you is a little bit of a closer look at the disaster relief. Now, certainly this is just from the CECP data, but to give you a sense of what we've seen over the past couple of years, certainly as a reminder of some of the major events that have happened, and again, I've highlighted at the top just I would say the largest disaster in the particular year in terms of the one that received kind of the highest corporate aid. In 2007, we had the Southern California wildfires. In 2008, we had the earthquake in China. In 2009, it was a typhoon in the Philippines, and then the earthquake in Haiti in 2010. When we look at the aggregate amount of giving to disaster relief on the left of this chart below to take a look at, what we see is that while 2010 funding rose above 2009 levels, it didn't exactly match the amount provided in 2008 to the earthquake in China. And certainly we can look at some differences within direct cash, foundation cash, and non-cash. You see foundation cash is a bit higher in 2010 than it has been in the past. That could possibly account for some of the matching gift programs that took place to provide employees with a mechanism for supporting the disaster in Haiti, for example, and having the company match those funds. So again, that's one possible explanation there. But again, just an interesting look at how this disaster relief has changed over the years. Certainly the BCLC has a terrific list in their corporate aid tracker as well of the major disasters as well in terms of the companies providing contributions to each of the disasters as well as kind of an overall total. This is just what we're seeing in the CECP sample. If we go to the next slide, we'll kind of conclude a lot of our data with a couple of final things and then take a lot of your questions. When we look at international giving, what we see are some real differences not only between manufacturing and service companies but also between industries. So just to show you what you're looking at here, manufacturing companies on average over the past 4 years have typically dedicated close to a quarter of their total giving to international recipients. Service companies are allocating significantly less, but that has continued to rise over the past couple of years. So this is something that we continue to watch in terms of how these companies are engaging with international communities. Now, if we look at the next slide, one of the things we do is dig a little deeper into this in terms of looking at the industry differences. For all companies, the average was about 12% going to international recipients. Now, if we look by industry, we're seeing some really unique pieces here. So certainly the IT industry is providing the highest average percentage of total giving to international recipients, followed only very, very closely by the energy industry with 26%. Now, the healthcare industry, for those of you who have been religious readers of giving in numbers, in the past has typically had a higher percentage of their funding going to international recipients. And it's important to note here that our healthcare group in the CECP sample has changed a bit over the past couple of years. We do have some more service providers in our sample and also service providers that are focusing a bit more locally. So again, some reasons for why, if you're wondering and have looked at that statistic in the past, why we're seeing some of those differences. But again, a great way to look by industry at how much is going abroad versus staying domestic. Now, if we go to the kind of final data slide here, we'll certainly have an opportunity to look at all of these findings in much more detail and giving in numbers. For example, for international giving, we'll look at that by region. We'll look at that in terms of how many companies have increased or decreased their international giving. So a lot of more data to come on those. But one thing I'll kind of conclude with here is we always like to give a little bit of a Fortune 100 and non-Fortune 100 comparison. When we look at median total giving, certainly there is a distinction between a Fortune 100 company and non-Fortune 100 companies' total giving. Again, those are just medians. Now, things like giving by program area, giving by motivation, matching gifts, those all tend to be very similar between these two groups. The two things that I've pointed out here international giving and then staffing are the two that we saw a little bit of a distinction in 2010. And again, a lot of this has to do with the size and scale of the company, as well as the size of the corporate giving budget. So for international giving, about 16% on average to international recipients for Fortune 100 companies, Fortune 100 equivalent companies, and then about 11% for non-Fortune 100 companies. Now, staffing certainly has a relationship with the giving budget, but again, here one of the distinctions we saw was about 13 staff members dedicated to corporate contributions for Fortune 100, and then 5 for the non-Fortune. So, yeah, and a lot of this also is on our website if anyone is interested in looking at these findings, both from the previous year reports are on our website for giving in numbers, as well as some of the most recent data you'll find on our website as well. It's corporatephilanthropy.org, and we'll share that again at the end of the presentation. But again, all of our reports and our research is available for free download on the website. So I encourage you to take a look and certainly let me know if you have any questions. We're going to end the kind of data part of this presentation with a poll question. And I'd like to ask the audience, as we're in the midst of 2011 now, and arguably in the second half, do you think that most companies are likely to increase their contributions over 2010? Do you think they're likely to decrease their contributions, or do you think they're likely to keep them at roughly the same level? Or are you unsure? And that's okay too. So we'll give you just a second to answer. Okay, great. So what we are seeing here is 53% think keep their contributions at the same level, and 35% say increase. About 9% say decrease. Let me show you the results. Now, we asked this very question on our survey in April. Mind you, there's a time difference here. So this was in April when our survey closed. But what we did see from our companies when we posed this question, 5% anticipated a decrease in total giving. 37% anticipated an increase, so you're very close on your percentages here. 43% expected no change, and 15% were not able to estimate at this time. We also looked at that by giving type, whether that was corporate cash, foundation cash, or non-cash. Certainly non-cash, as you can see, a little bit of a bigger percentage of not able to estimate. Here, again, we're looking at the impact of product donations or one-time donations of land or property, which can significantly change in a matter of months. So many of those can be unplanned and unexpected. So again, just some real interesting pieces here of what we're looking at ahead, but want to make sure that we're able to answer your questions. So I'll turn it to Megan to provide me with some of your pressing issues.
Sure. Thank you, Alison, so much. This is a lot of great information. And again, to the audience, you will have a copy of the slides after. We have gotten a ton of questions, so I'll let Casey start with the first one. And if your question isn't answered, we can send those to Alison afterward and follow up that way.
The first question we have is going back to, disaster relief and recovery donations. And the question is, what do you foresee next year in light of the Japan and other domestic disasters that have taken place? How do you anticipate that this will change?
Yeah, I think that's a great question. Certainly this year with what we saw, well, with this year being 2010, what we saw in Haiti and the floods in Pakistan, and for some companies actually contributions to the Gulf oil spill, I think this year is going to continue to remain very high in terms of the disaster relief contributions. One of the things that we asked at our Corporate Philanthropy Summit is we asked whether the audience felt that their company was responding more to short-term relief efforts or to long-term recovery, and it was roughly around 70% to short-term relief efforts. I do think that percentage will continue to rise as companies are facing more pressure to have an immediate response to a disaster, and I also think they're becoming very thoughtful about how they respond, whether that is through a matching gift program for their employees, whether that is a cash contribution, or for those companies that are able to respond with product donations that can be very useful, how they can use their skills, their services, their business in many senses to make an impact. So I do think we're going to continue to see that be a considerable portion of our contributions and something that companies are focusing on.
Great, thank you, Alison.
The second question that we have is related to the employee volunteer program offerings of the corporations that you surveyed, and wondering if you heard anything from the CEOs about why the Dollars for Doers program tends to be the most popular.
Well, this wouldn't be from the CEO's perspective, but I can give you a little bit of perspective in terms of why companies are certainly offering this program. Now, the Dollars for Doers program is one where the company is providing a grant to a nonprofit organization in recognition of volunteer hours. So it's a little bit different from just a typical matching gift program where the employee is contributing cash. The employee is actually contributing a set number of hours and receiving a grant for their nonprofit. I think there's been a lot of interest from companies in continuing this as employees are becoming more engaged with their communities through these programs. Having this opportunity to also have the company provide a matching grant is quite appealing. I also think that certainly some companies are starting to tie their employee volunteer programs in some senses to their key focus areas. And again, this is another way that they can continue to support education or health or, in fact, any issue area that an employee feels is very important. One thing to watch with each of these programs is the impact that the on or off company time program is having, whether the employee is allowed to do this during the workday or outside of their normal work hours. And I think that certainly as more companies begin to offer this paid release time during a workday, programs particularly like a Dollars for Doers program where it's a set number of hours will continue to really be attractive both to employees and to companies.
Great. I think we have time for one last question, and then we'll give it back to you for closing remarks. But the last question is actually going back to the international giving chart. And the question is, do you have any insight about why international giving remains low? Are there specific challenges that companies are coming up against, or is there anything else you can say about that?
Yeah, I think that's a great question. I mean, certainly we've seen this percentage for all companies remain fairly consistent over the past couple of years. It was increasing previously and has seemed to remain fairly stable right now. I think one of the things to mention just up front is certainly over the past 2 years with everything that's happened in the economy, companies have focused on domestic populations that have been impacted by the economy, whether that's through health and social services, whether it's community and economic development. And I think some of those change in focus areas slightly to help their immediate communities has impacted how much they are giving abroad. Now, certainly for any of the companies online and for many of the nonprofits, there are a lot of challenges with providing grants abroad. I do think for a company, it is a decision in terms of how much they're investing in international communities that really specifically relates to how much of their operations are overseas. Do they have offices? Do they have employees in certain countries? How is that all impacting the specific level? And I think that really plays into this. The other piece to mention is, as we are working on this very question and identifying a lot of these challenges, one of the things we're working very closely on is how can we improve our measurement not only of just international giving, but how can we help global companies report their giving overall? Are we missing parts of this because of the way our standard is defined? So we're spending a lot of time right now, and if you're interested, we have a presentation on our website from our most recent conference about what we're looking at for an international valuation standard. How can we help a global company report these figures, not only again to international, but just overall in a way that makes sense for companies to benchmark? How can we have a better sense of how much is going to each region by using an apples-to-apples system? It's a really exciting project that we're working on, and I encourage you to take a look at that presentation. It's under the events section of our website from our Corporate Philanthropy Summit, and we're working on that throughout the summer and through the fall.
Great, thank you, Alison. So before we wrap it up, I just wanted to give you an opportunity to give a few closing thoughts to the audience.
Great. Well, again, thanks to everyone for joining us, and a couple of things I'll point out. I mean, certainly in terms of the findings, I hope you found this useful to see what we saw in 2010, but really keep in mind also what we see when we look at 2010 compared to previous years. What's changing? What are the key factors driving this? I hope you will all be eager to see Giving in Numbers coming out in the fall, and can use that as a reference point for your work, whether you are on the nonprofit side or the corporate side, and would certainly welcome any and all of your feedback on that report of what we measure and how we can be useful to you in reporting on this data. Certainly, again, our website, corporatephilanthropy.org, has all of these resources, whether it's the Giving in Numbers report from previous years, the new research report I mentioned, or some of the presentations from our summit that you can take a look at. All of that's for free download, and feel free to contact me with any questions. I'm happy to go into a lot more detail on any of these topics with all of you at any point. And again, our huge thanks to VolunteerMatch for hosting this webinar series. We're delighted to be part of this today.
Well, thank you, Alison. We are very grateful to have CECP as a partner and be able to share this with our audience. A reminder to those on the line, we'll have a recording and a copy of the presentation sent out after, and also a recap article on our blog, Volunteering is CSR. So thank you again, everyone, and we'll see you in August.